Well, hey there, and welcome to a fresh episode of Show Me the Crypto. This week we chat with Megan Knab, CEO and co-founder of Franklin. Ulf, what were your thoughts on this week's episode?
Yeah, it was so interesting to get to know all about Franklin and Megan's take on the crypto industry in regards to taxes, payroll, and facilitating that move from Web 2 into Web 3 as a business and how you can handle that.
Yeah, I think this is a timely episode given we are approaching tax season. So in the second half of the interview, make sure you watch the whole way through or listen the whole way through, because we definitely touch on things you need to know entering the tax season. But also, I think that we are now part of a world where these crypto payment solutions for businesses are going to be more and more important, whether it's a global workforce where you have to pay people all around the world, or the fact that people want to be paid in a timely manner, not waiting 2 weeks for their next paycheck. Megan dives into all of those solutions. Enjoy this week's episode.
Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Megan Knab, co-founder and CEO of Franklin. In 2016, when Web3 finance was in its infancy, Megan left traditional finance to enter crypto finance and accounting full-time. That journey led her to work closely with the Ethereum team and ConsenSys before founding VeriLedger in 2018 and becoming Serotonin's VP of Finance in 2021. In March of last year, Megan co-founded Franklin, which is a hybrid cash and crypto payroll solution for crypto native and traditional startup companies. Megan, welcome to Show Me the Crypto.
Thanks for having me.
Yeah, excited to have you on. And so I want to start kind of going back to that 2016. What gave you the confidence at that point to leave traditional finance, where I'm guessing there was some level of comfort, and enter this Web3 space where the rails were just being built at that time?
Yeah, well, I have some tea to spill about my time in traditional finance. It was much less of a feeling of feeling confident about entering into Web3 or Ethereum at the time, and much more frustration. Like, I can't do this. Like, I can't work on Wall Street anymore. But to sort of get into it, my background is as an accountant. I worked as a staff accountant for a couple of years out of college. The long story short is that during a budgeting process, I ended up uncovering this multi-million-dollar accounting fraud happening at the company that I was working at. And it was this super bizarre experience. Honestly, it felt like a movie. Like, there's a movie called The Accountant, which has, like Anna Kendrick and like all these famous actors. And it was like that, where I spent like weeks going through old boxes of like paper purchase orders and invoices and trying to map it back into the accounting software. And once I finally figured out like what had happened, like who stole the money and how they did it and how it sort of went unfound for like years, it was this like haha moment, like, oh my gosh, I figured it out. And now like there will be justice. Like, this person is going to suffer consequences. And, brought it to the company leadership. And essentially they were like, oh my God, this is so embarrassing. Like, we can't tell anybody that this actually happened. And the person that did it. He's worked here for so long. He's like one of us. We can't fire him. He's been here for over 30 years. And I was shocked. I was just completely like baffled. And at the same time, I was getting my MBA at night, which is actually where I learned about Ethereum, like in school. And some confluence, right, of like learning about this, sort of like new technology, like blockchains, and what the fundamental technology of Bitcoin was, and like the next innovation of Ethereum, sort of overlaid with this sort of wild accounting fraud and like dealing with like these crooks essentially. This light went off where I was like, oh my gosh, this is the tool that is going to solve corporate greed. Like, I have to like learn more about this so that, this kind of stuff doesn't happen again. And these guys don't get away with like stealing money anymore. And so I dropped out of business school to be able to go to DevCon in Shanghai. And I was like so close to graduating. And I was like, I'll just withdraw for the semester. I'll go back, and, never ended up returning. And so, I went to DevCon in Shanghai, and a lot of the sort of content was way over my head. I felt like I totally didn't fit in. I didn't really know anybody there. And was just thinking through, okay, like I have some skill set, like maybe I can bring something to this community to like contribute and help develop it. And so, I have been toying around with different crypto accounting concepts kind of since that time. But that's the sort of genesis story of, of how I got into it, and why I think, accounting, even though people like make fun of it as boring and whatever, is like actually a really cool profession. And there's a lot of innovation happening in it. And, more and more people are getting into it, which is like really exciting to see.
So going back to that crazy story,
yeah.
Was that how it ended? Is that the guy got off scot-free and the company kept him on the team and everything?
Yeah. That's how it went down. And you know what, to be honest, I think it happens a lot more than we sort of know about, like big flashy accounting frauds that happen at public firms like Enron, or Tyco, or whatever these sort of like classical accounting fraud, business cases are, in the most recent example at FTX, it just gets swept under the rug. And like some of it, I think, is just a difference in being able to like use language that makes sense. Like not everybody understands like how to read a balance sheet, or like how you're supposed to classify assets, because it's not like always logical, right? There's some like specialized knowledge. So I think that there's a disconnect there. But I think it happens a lot. So nothing happened. I was telling somebody who worked at the SEC about this story, and they were like, well, you should have filed a whistleblower complaint. But it is a private company. Like I, for sure, like if I kept pushing it, I ended up quitting, but like, I wouldn't be able to continue working there if I, was this sort of squeaky wheel, just sort of complaining to the leadership about their own behavior, So there are a lot of incentive structures in corporate America, at the very least, that just don't incentivize, right? Honesty, perhaps, or really transparency in a lot of cases. We have like one of the most sort of sophisticated capital markets infrastructures and regulatory infrastructures in the world, which is helpful. But there is this sort of whole realm of things that happen in private companies that it's much harder to sort of hold people accountable to.
Right.
And that's
it still seems crazy to me that they would just keep him on. Is there any, do you suspect at all that this might have maybe gone up to other people, or maybe other people were in fact a part of this? Not to start creating a scandal on the spot.
Yeah. Well, the person certainly wasn't like working alone. And some people ended up, and kind of like sadly, honestly, lower down the food chain in terms of like the sort of like hierarchy of the company did end up losing their jobs. But the person who was ultimately responsible and who, helped facilitate it, like got off, right? And you see it also too, like in the financial crisis, right? There's like one associate at one of the big investment banks that ended up going to jail, right? As opposed to like a real sort of like restructuring of like how these firms were able to actually perpetrate it. Like Dodd-Frank came up, something like, whatever, a few years later, and it's created a lot more bureaucracy. It maybe has like increased transparency, but, has it made the kind of difference that probably like, should have happened? Like not so much, I think. And so, working in Web3, we have this like interesting paradigm. Like, can we sort of invert these incentive structures that allow for this kind of bad behavior? Like perhaps. And so that's why I'm excited about this industry and, have been hanging out around here for the last couple of years.
So let's dive a little bit deeper into some of those resume bullet points. So there's VeriLedger, then you go on to eventually 2021 VP of Finance with Serotonin, and there was a few other things going on. Can you just kind of break down in a little more depth, like what that experience was and what ultimately led you to co-founding Franklin?
Yeah, sure. So I started up VeriLedger, which was with the idea of it being like a QuickBooks for crypto. There are a lot of these kinds of systems out here now. It was like interesting for me. I learned a lot about starting up a business and sort of going through the entrepreneur's journey.
Yeah.
But ended up sort of like foraying that into a job working at a embedded investing API company called DriveWealth. They do embedded equities experiences. So they power investing for applications like Cash App or Revolut. So if you want to go log into Cash App and also buy stock, you're actually like interacting with another company that's not Cash App, right? Because there's so many layers of like brokers and how to buy stocks. There's a massive infrastructure there. And so this is one of the companies that was sort of like the plumbing, piping in equities infrastructure. And they wanted to do the same thing for crypto. So started up a crypto trading desk there along with a couple of others. Tapped some of those guys on the shoulder last year to come help me start up Franklin, which is, exciting, and you can talk about it more. But after spending a bunch of time there, Amanda Cassett, who runs Serotonin, who I knew from my time in the early days at ConsenSys, sort of tapped me on the shoulder and was like, hey, I've started up Serotonin, and they were getting a lot of traction. They needed help scaling and sort of formalizing their back office. And that's like what I love to do. Like I love working with early stage companies and sort of setting up the back office infrastructure and creating great systems and thinking through like, how do you make some of this kind of like normal financial operations stuff better in a Web3 context? And so, it was so exciting getting to work with her and some of the others that had, also been at ConsenSys in the early days, and really sort of like incubated a lot of ideas of like, okay, how do we try running a business a little bit differently than everyone else? Like, how can we be more efficient and also create a really great environment for people to work in and have, customers that really like enjoy working with us and we retain them for long periods of time. And it's important work in Web3 marketing. There's a lot of ideas out there and there's a lot of noise. And so like, how do you help sort of like separate that and support, awesome Web3 founders? So that's the quick story there. While I was at Serotonin, I think there were maybe 12 people when I started and over 60 people by the time I left to formally like spin out and have Franklin, be my like main squeeze. And so we ran into a lot of issues, like logistical problems that I think a lot of companies in Web3 run into where, we're getting paid in cash, we're getting paid in stable coins, we have some tokens, we have staff in the United States, we have them globally. And like, how do we consolidate all of this money and get people paid? And so spent a lot of time talking to our clients because I knew that they had the same problems we had, tested out like a bunch of tools, like how do we do batch processing of crypto payments? How do we ensure there's still privacy, right, on chain? And after a couple of months, realized there really wasn't anything that would suit our needs. And so we started building it ourselves. And that's eventually what became Franklin.
I love it. And so like how far along is Franklin in the journey from where you were at that point of sort of like having this understanding of the challenges you had making this all work at Serotonin, and then now developing that into a platform that sort of stands on its own? Where are we kind of in that initial startup journey?
Yeah. So I think in the like late winter and springtime last year, I tapped my co-founders on the shoulder. Eric and Sean, they're awesome. We were the ones that built out the crypto trading desk at Drivewall, and was like, hey, I have this really great idea and I think you guys should come and help me build it. And was really excited that they were down to do it too. We prototyped some different sort of smart contract infrastructure ideas for a couple months. We also have only ever paid ourselves, like using our own software. We never used another sort of alternative, which I'm like very proud about.
Yeah, that's awesome.
So it also meant like we're not paying ourselves until we get this right? So we had a little bit of incentive to make sure we were executing. And then I think like around summertime, we brought on a couple more people to sort of help us scale out the company, scale out the tech. And we launched our software actually in September last year. So what we've built is not exactly a Web3 native platform. It is a hybrid cash and crypto payroll system, and it's tax compliant. So these are things that like I took from my experience as an accountant and trying to operate compliant Web3 businesses and feeling a lot of the pain points, and create sort of something analogous to what you get with a Web2 software. So when you sign up for Franklin, right, we collect a lot of tax information. We collect some crypto information as well. And we try to package that up into a cohesive, like nice user experience so that founders who may not know like what it means to run payroll or like haven't ever done something like that before, they can have like an experience that they would have if they were using a Web2 alternative. We launched in September last year. We have some customers on board, which is really exciting, really battle testing the tech, and are sort of at this point of like, okay, we have our sort of foundational base and have some exciting stuff coming up that will, I think help us scale our product offering to be able to reach a wider audience. So that's where we are.
There's a lot of things specifically we want to unpack. One, you touched on a little bit in the sense of the global aspect and trying to figure that out. And that's something especially I find, over the last couple of years, COVID, right? It sort of accelerated a lot of companies' mindsets in terms of forcing them to use technology, forcing them to be a little bit more relaxed with their maybe coming to the office policy. And through that, one of the benefits is the realization, okay, we don't have to necessarily just be hiring people in our own city. We can tap into global talent because we're more adaptable now to this tech. Is this one of the main drivers for why something like Franklin makes sense? If you have people kind of all over the world and getting them paid is probably a challenge in your own currency. Is that like one of the main instigators why this would make sense for a company?
Yeah, I think that is certainly one of them. And I think that certainly with COVID, it did accelerate some of these like future of work kind of like trends that I think we were moving towards anyway, at least in the sort of like Western and like white collar world where, there's no reason to have like these huge CapEx costs of like a massive fancy office in like Midtown Manhattan, right? Like a company can operate pretty efficiently and productively without that kind of like large sort of like expense. That's one thing. And then certainly, when we were all working from home, like it became clear, like there's this whole other world, right? Or there's a much wider world out there that you can draw talent from. And so certainly like this advent of remote work and I think the probably like continued advent of remote work is certainly something that, you know, is exciting for entrepreneurs or business builders anywhere, or, you know, workers. You have a lot more opportunity to participate in industries or companies that you might not otherwise, right? And that happened really fast in the span of like a year and a half, 2 years, right? The whole world changed, you know, and so that's one thing. I think the other thing is, you know, and I'm certainly like no economist here, but there are, I think, some macroeconomic like drivers that also make this sort of like use case like quite interesting. And payroll is just sort of like one subsect of like a greater conversation around stablecoins as a payments tool. So, you know, our banking system is quite slow. It's quite fractured. You know, certainly also on the investing side, like equities is also like, you know, there was T3 settlement, you know, back in the day. So it takes 3 business days to actually settle a stock. Now we have T2. DTCC, which is the regulatory organization that manages all equities in the United States, has said they want to move to a T0 or instant settlement. And they're using, you know, like digital ledger technology, right? Nobody wants to say blockchains, but so there's like a lot of opportunity there. Certainly in payments, like we've seen JP Morgan, like Santander, all these other banks starting to like test using crypto for remittances. In the payroll industry specifically, you know, it takes upwards of like 5-10 business days for companies to actually be able to like move money via ACH, and then have companies, you know, distribute it in whichever way it needs to go to whichever workers based off of all the different sort of like tax calculations, et cetera. So there's not really a good reason anymore to sign up for a payroll software that is going to hold your money for 10 days, right? And then send it to your workers. It's really costly for you. You're losing, you know, like the ability to gain interest or do more with your money while it's sitting in your balance sheet. And there's also like not really a good reason for workers to have to wait every 2 weeks to get paid anymore, right? So we are sort of jumping on that trend by trying to accelerate the use of stablecoins for payments by just injecting it into people's paychecks to the extent that they want it and to the extent that companies want to pay people that way. It's much faster. It settles instantly. So like every block, right, that gets minted on whatever chain that you're operating on, it's a really exciting concept.
Yeah, it is. As a business owner myself, I've got my team, and it is ridiculous how slow it is to pay people with traditional finance. Is so crazy, actually. The wait times to get things done. So the thought of utilizing blockchain technology just for the speed alone, you know, the instant settlements is actually like huge, really. It's just not massively adopted yet, but I think once it is, everybody's going to look back and be like, why did it take us so long to like finally make this work with our businesses? It's just like, so I think sorry, go ahead.
I was just going to say, I totally agree. And it's one of the interesting things, having been hanging out in this industry for a while, like, why haven't we done more with stable coins, right? They seem like such a good use case, right, for showcasing the value of crypto. And I think that like we move slowly, right? Like financial transformation takes a long time. And as many people, I think, you know, in this industry admit, like there's really tough like user experiences that exist with interacting with stable coins. And so I think that there's a lot to be said for people who are building the protocols, who are actually like enabling this technology to exist. And this sort of like top layer of application builders, like there's a lot more left to do. And it's one of the exciting things I think about Franklin, which is like, okay, we have all this great technology. We have public blockchains. We have stable coins. We don't have to issue it. We don't have to build the full stack like maybe you had to do like 3 years ago. we can just build an application that is super usable, and we can also contextualize it in the Web2 world where we understand we need to pay taxes, right? We have to give to Caesar what is Caesar's. And we can do that with this technology too. We don't have to create a completely different environment to operate in a bubble, and we can have our cake and eat it too.
What about for companies who, or maybe individuals who want to be paid in other crypto, maybe those who are more crypto native, or maybe crypto native businesses who are interested in being paid in Ethereum or something like that? Is that an option? Will that be an option in the future? Who all does Franklin cater to in your greater realm of like different customers,
Yeah, for sure. I think that, like overall, you can get paid in kind of whatever you want, right? There are some things to consider, though, I would say, which I encourage like anybody, any entrepreneur company that's launching a token, before you think about paying your staff in that token, like things to think about. So there are like rules on a state-by-state basis in the US saying how you can get paid. So I forgot what law it is, but there's some case precedent where there were coal miners working in like Appalachia, and they lived in sort of the town that was built by the coal mine, and they got paid in like coal mine coupons. And it created this situation where they were never able to actually leave. They had no optionality because they had this sort of like local currency that was just not transferable outside of their small ecosystem. And it led to, pretty unpleasant cases of, sort of just worker exploitation. And so from that, like fairly old sort of situation, there are just like legacy rules where in many states you have to pay W-2 wages in a USD equivalent currency. So there's I think something like a little bit analogous here, where especially in the ICO days of 2017, when many companies were launching tokens, there was, I think, what was an over-indexing of companies promising tokens to their workers or to their investors, right? That really didn't have like this sort of economic benefit, right? That a USD or other sort of like fiat denominated currency would have. So, I think when you think about paying your staff and like what is an interesting compensation package, tokens may be part of that, but should they be the primary thing? Which is, that's like a prescriptive thing, I would say. From a software perspective, like we really care about being compliant. That's how we sell ourselves. And so, we look at each state's rules and we'll prohibit certain types of payments depending on what state, you're operating in or you're paying workers in. So that way we're helping you make sure that you're following the rules, and we as a processor are also following the rules. I think that like the trend more recently is to treat tokens kind of like you treat equity options, where it's sitting in a vesting contract and gets paid out every so often. There's really great sort of innovation in payment streaming, where you can make that a much more interesting sort of vesting experience than every month you get like a notice from Carta or something like that you have another option that's vested. So those are experiences that we can help enable for sure. But we look at it as sort of like a wider kind of like compensation package. So you can get paid in cash, you can get paid in stable coins, and then other types of payments like tokens, or, we can offer them as a bonus or sort of like this equity type kind of asset. Those are all sort of experiences that we can help facilitate.
Ulf, do you realize our audience has been either watching or listening to this episode for 20 minutes?
20 minutes? No, they should probably subscribe.
Yeah, they should subscribe. And if you're watching on YouTube, make sure you comment and turn on notifications. And if you're listening to this podcast, especially if you're on Apple Podcasts, leave us a rating and a review.
We're also on Twitter, Instagram, and even TikTok. So go check out the episode description. You can find all that information below. And we have an update on the NFT, don't we?
That's right. We didn't previously mention this, but this NFT for our OG supporter is a one of one. There will only be one of this kind ever minted, and we have a few surprises for the person who purchases it. The link is in the episode description.
And back to the episode.
So one thing I'm curious about, Megan, is with regard to cycles in the crypto space and how that typically draws interest in, obviously, when the price goes up, a lot of people are drawn to the space for that reason. And then in a bear market, it gets a lot quieter around the crypto space. I know that the launch was kind of late last winter into the spring, and then the official launch, as you mentioned, was September, I believe. But do you anticipate kind of the demand for this type of thing could have some result of like where the crypto market is a little bit, or do you think it's kind of completely unrelated for some of the reasons you've talked about in terms of like the speed of getting paid and just that side of things? Like, what are your thoughts there?
Yeah, yeah. I think so having been in the space for a couple years, I feel like a crypto boomer sometimes, to be honest. Like, I've seen these bear market cycles come through, as I'm sure you guys have as well. And like this bear market cycle, like there's still a lot of people in this environment compared to like the post, 2017, ICO crash. And so it's not like there's nothing going on. There's a lot going on. And I think that if we were to look at like the average trend of, like people entering the Web3 space or people starting up crypto companies, we would see on average, like year over year, it's increasing, I think. Mm-hmm. There are certainly more people in this environment now than there were 2 years ago. I think that there are other factors that we think about too, where, certainly like venture capital funding has, fallen off of a cliff, I think, over the past year. So much money has been pumped into this environment, and there's certainly like a pullback now. And that's, I think, the Web3 crypto market's always been more volatile than traditional fintech or other technology sort of sectors. So, it makes sense to me that we see like wider swings in some of those like capital markets activities. There is, I think, also this like trope, and I listened to your guys' interview with DeFi Dad that I think is like totally true, which is, bear markets are for building, and there are a lot of people building in this environment. And like that's from a business perspective, that's who we want to be working with too. We are certainly mission driven in this technology, but also we just want to work with early stage entrepreneurs. We want to be the first payroll software that you use to like pay your team, and we want it to be a really good experience. And so it feels a little bit like we're in the sweet spot, and there's perhaps like less noise of people who are sort of, driving by and like, oh, maybe I'll launch an NFT kind of thing. Like that's like less of a sustainable business for us. But nothing wrong with experimenting either. But it's kind of like refreshing, to be honest. So for myself, and we're lucky. Like we raised a seed round. Like our investors are really great. They really like are like long term, like sort of like crypto blockchain sort of like dedicated to building out and scaling this environment. So we're lucky to have like good support. And certainly, having been born out of a company like Serotonin, who is like the Web3 marketing agency, they work with every big name in this industry, and they have for like a long time. Like, it's just really encouraging.
As an employer, if you wanted to utilize Franklin, and I mean, that might be a question in itself, what does that look like to transition maybe from the traditional payroll systems to something like Franklin? But the real question I wanted to ask was, beyond the employer, what about the team? Because do the staff want that? And is the answer, well, if they don't want it, we just pay them out in regular cash? But if they do want it, then what does that look like? What's the user experience for them? Do they have to now set up a wallet, and are they in charge of their wallet security? Is there that whole you better figure out crypto, and you better figure out wallet security and all that stuff to now manage how that comes in and how you're going to move forward? What does that look like?
Yeah. So I think that the cool thing about what we're doing, perhaps compared to some other tools out there, is that like, we want to enable like a pretty flexible experience. So, for example, like myself, I get paid in half cash, half crypto, and that really works for me, right? I operate a little bit more in the like Web3 space than perhaps like your average Joe, right? Financially. I think that like historically the options have been, okay, we're going to pay you, you're contributing to a DAO, we're going to pay you 100% in the tokens of the DAO or a stable coin, and then it's kind of on you to figure it out. You're a freelancer, we're not going to give you insurance, like good luck. And maybe you try and hustle by like contributing to a lot of DAOs or other Web3 companies, and that's perfectly fine. It's just like a very insular, perhaps, kind of experience. Other like most Web3 startups, right, are funded in cash, and they've never had the option to be able to offer their staff other assets that are on their balance sheet because they have to go through an audit. Like they have to go through all of these sort of perhaps like humdrum sort of like financial activities, and they don't have the bandwidth to really figure out how to facilitate this. And so, our goal is, if you're crypto curious, right, or if you're crypto native, we can do both for you. So you want to get paid 10% of your salary in stable coins, and then you want to automate that transfer into like a DeFi protocol, like we can help you with that for sure. But I would say, we try our best, right, in our application to make sure that like we are implementing sort of like best practices for our users to be connected, to get, like responsibly managing their wallets, right? If you are a payroll administrator, you're verifying all of the wallets that you're paying. Those wallets are tied to an employee profile. You have to look at it every payroll cycle. If an employee wants to update their wallet or change their wallet, or for some reason their wallet's compromised, like we have like a big red lever that you can pull and you go through an updating process. But it's probably not for somebody who's never touched crypto before. Like there is some level of like personal responsibility that you have to take on if you're going to interact with crypto assets, because even though it's faster and cheaper, right, in a lot of ways to interact with stable coins or other tokens, you don't have really the benefit of being able to call up a customer service rep at Bank of America to say, hey, there was a charge on my debit card that doesn't look right. Like that responsibility is on you. And that's another paradigm, right, of like Web3 economies is there's a lot less room for error on the retail investor or just like worker side. And so, I think that's the thing. What can we do? Like we can enable lots of different wallet experiences. We just released an integration with Plaid's wallet on board, which is like a really slick piece of code, honestly, that helped us increase the surface area of wallets that we can support. We can support multi-sigs, and that's where we're at. I think that's the best that this industry has, and so it's not for the faint of heart, I think.
What about on that front end, as I was kind of leading into or maybe started with, is from like the employer's standpoint, the business. If I wanted to move over, is it like moving to any new piece of technology and it's just going through the onboarding process and setting things up? Or are there some other, I guess, more complicated parts? Like, for example, if I'm going to be paying out my team in stablecoin, well, I still need where does the source of that come from?
Yeah.
Do I have to first convert my my fiat into crypto and then from there deposit it in like a wallet that Franklin pulls from, or what's that look like?
Yeah, totally. So transferring payroll providers is a little bit more complicated than just pulling a switch. So if you're a entrepreneur that uses whatever payroll software now and you want to switch over, what do you have to do? You have a lot of the infrastructure already that like we would need to be able to support you. We would need to have sort of like data migration, which takes a minute, right, for somebody to do. So to make sure that we're properly transferring all the tax related information from your worker population into our system, so that we tick and tie everything properly and reconcile it on the back end and make sure everybody's getting paid what they're supposed to, and the local, state, federal government is as well. And then the thing with Franklin is if you want to be paying people in crypto, you connect a wallet. So if you already have those assets on your balance sheet, you have stable coins or tokens or whatever, you connect your wallet, you transfer it into the treasury, and easy as pie. What we don't allow for now is swapping on our platform for a couple of reasons, most of which are sort of like regulatory related. There are interesting things to think about there, and perhaps like widgets that we can integrate with to sort of like onboard and offboard from crypto to fiat more easily. But for now, you have to have the assets there ready to deposit at pay time. The good thing, I think, is back in my former life, when I was running payroll for a company of 60 people, right, there's a lot of money movement that sometimes has to happen to make sure that all of the assets get to the right account at the right time, to make sure that they're there for an ACH pull that takes 2 weeks. So it's tough sometimes, and especially depending on the kind of business that you're running, right? Like if you don't have a customer that pays you on time, like what are you going to do? Like there's a lot of sort of like cash management to think about, and so this ability to decrease the time in which the assets are on your balance sheet versus when you have to pay is a lot smaller, and that gives entrepreneurs a lot more flexibility. So that's kind of the experience for now.
It sounds like there's a lot going on just in terms of all of the differences between states and that type of thing. But is there ever a goal to bridge internationally? Like, will you ever service Canada?
Yeah. So we can actually like support contractors outside of the United States. So if you're working for an American company or you're a company outside of the United States and you want to be able to pay contractors internationally, like we can do all of that too. We do less of the tax support, but certainly like we've heard from entrepreneurs, Canada as a popular place, also Germany. So sort of like places, right, where you see like a lot of Web3 sort of innovation happening. Like for sure, maybe like the next hill to climb for us. I'm kind of curious, as you guys like operate your own business and certainly like are pretty like deft in this space, have you guys thought about like streaming protocols or like how you would think about like perhaps like enabling something like that on your own? From my perspective, I feel like there's a lot of hype about streaming, and there are not many companies that really want to do it because it is like a little bit more complex to operate. And, I know you guys talk to a lot of people in this industry, and I'm curious if you have any takes on it.
No takes over here. I'm interested to know like what you've heard. It's probably more in your wheelhouse, so it's not something I'm so familiar with. I don't know about you, Wade.
No, I'm not.
Yeah, I mean, I think that there is this sort of like sentiment of like being able to get paid every block, or being able to like claim payments every day. But it does become a little bit unwieldy to manage that kind of thing, even if you can actually automate the payouts via smart contracts. But it's just been like this area of research. Like we built streaming, but nobody seems to want to use it, which is fascinating. So we're looking for a good like juicy streaming use case, but nothing yet.
Yeah, it's really interesting because it hasn't been something that's been brought up for us, but we love to, be talking about whatever's on the forefront and what's coming up. So something to keep in mind for sure. And we'd love to hear too, if down the road that does get more developed on your end and you do see customers start implementing it. We'd love to explore that in more detail.
Yeah. I think that for my, like, if I were making 2023 predictions, one of my predictions would be like the streaming hype would go away. But it's sort of a negative take, and I think not that popular. So maybe we can check back next February and see.
I thought you were gonna go with like stream is gonna blow up, but no, you just shut it down.
No, I mean, I would like it to blow up. Like, I think it is a really cool primitive. I think that there's like a weird disconnect with like people who run businesses also like actively managing a streaming treasury. Like, there's just some disconnect where they don't do it, or perhaps like you need to be more sort of like actively managing the work that people are delivering. It's like more bounties based perhaps, but I think that there's a lot of hype and not a lot of substance to it, but we'll see.
One thing we want to dive in to, Megan, is tax season. Tax season's coming up, and I know that there are some differences between, of course, the States and Canada, but you know, what should people be thinking about right now? A lot of like the bull market brought in probably a lot of new people into the crypto space. Obviously, the second half of last year, we definitely entered a bear market, but in the first half of the year, we were still probably bull market territory. Some people may have made some capital gains, all of those sorts of things. Like, what should be on people's minds right now as maybe they're new to this and they're entering tax season?
Yeah. I mean, this is like this thing that people, I feel like it's the number one thing that everybody in Web3 has in common is like everybody dreads tax season because it's so terrible. I think like the advice that I have is like not great, but it is the advice that I have, which is like
really selling it.
I know. So what I would say is like, if you are actively crypto trading, it is really hard to wait until the end of the year to go back and understand what that activity was. And so there is this advice that I have, which is like, if you're actively crypto trading, you should be actively working on your tax book throughout the year. And it's just going to make filing time a lot easier and also like much cheaper. I think that a lot of people in this industry, especially people who've done pretty well, like feel like they can just pay somebody to make it go away for them. And like, I have certainly been that person where I have like filed taxes for people, and it's just like, it's hard. It's really hard. So I think that active management of your tax position throughout the year is like probably like the best solution if you have an active book. However, if you have just some crypto exposure, getting paid in stable coins, like me, for example, we just posted W-2s and 1099s. So like, you know, all that stuff is accounted for in tax forms, at least for people who get paid through the Franklin platform. There are also like a lot of tax softwares out there that are much more sophisticated than they used to be. And there's a lot more optionality there. To promo one, token tax is my favorite, personally. But I think that ultimately the thing to remember is like, you are responsible for your own tax book, and, you know, you have to check it, especially it's really hard. Like, I have a lot of empathy for people building these tax companies or general ledger softwares, because there's so much out there, to be able to support. So like any sort of like, you know, yield farming smart contract that maybe doesn't have tons of volume, like chances are these larger platforms just might not have it, right? They might not be able to automate that logic, and you have to do it. So, you know, certainly like I have a Rolodex of people who are great crypto tax preparers, happy to make any recommendations, but you know, that's what I would say. I think that it is prudent always to like file an extension. So, in the United States, you can push your tax return filing date from April 15th to October. Like, that's a good idea if you need the extra time. I think it's definitely worth it. You still have to make some sort of payment, right, in April, but the actual filing can wait. You know, there's a bigger sort of like, I think policy conversation going on in the United States. And I don't think that Canada has this sort of problem actually, but you know, TurboTax and its parent company Intuit, right, have spent like hundreds of millions of dollars lobbying Congress to make sure that they can still offer their product and the IRS won't offer a free version. Like, it doesn't make sense, right? Like, logically, employers are reporting all of their wage information to the government, right? The government kind of knows, you know, and it's this weird, like very expensive thing that we do here where it's like, let me file a tax return. The government says I overpaid, and then it takes 8 months to get a refund check. And I paid $300 to TurboTax to have them tell me that. It's weird. So there's this movement, and it's a movement I'm a part of as well, to make tax return filing free. So there are certainly charitable organizations that do it, where you have volunteer tax preparers work with normal people. They can walk in off the street with their W-2s and will help you file your taxes, and try and find the right things to get you the maximum benefit, and it should be free. And so this is another interesting product line, I think, is we at Franklin have all of the income tax, right, information for payments on our system. Can we enable a free filing experience? I think we can. And that's kind of something that, is maybe perhaps not the most business savvy thing to do, right? It's not we're going to be charging people to file their taxes through us. That's not the point, but it seems maybe the right thing to do in general, where, it's just information, and it's information that belongs to each worker, and pressing a button to send it off to the government is not something that should cost $400. So
it wasn't that long ago that Wade and I had another guest on, and we were talking about crypto taxes, and it was very unclear at the time, what even the crypto tax laws are and what those regulations, are. And clearly a lot has evolved just even in the last 12 months. But what's your take on the current crypto tax laws? Are they reasonably easy to understand at this point? Are there tools that make it easier to use and understand? And where is it going? Because clearly things are still evolving and changing.
Yeah. I will never forget, as somebody who I follow all this IRS Twitter handles and the, commissioner's Twitter handle and stuff like that. I look at it every day to just see what's going on. And they get the most social media boost when they tweet about crypto, which is just a little nerve-wracking to me, where it's their engagement's going up. I don't know, but years ago, right before the pandemic, there was DevCon in Japan. And while we were there, the IRS came out with guidance on airdrops that they had said that they were going to come out with. They were oh, we'll have guidance released within 30 days. And then it was 7 months later. And it just so happened that, it's middle of the night in Japan. I was scrolling through Twitter, and I was oh my God, there is guidance on airdrops. And I read through it, and it was wild. They did not properly define an airdrop. They sort of confused it with what a hard fork was. And it was, as a tax nerd, extremely disappointing, because you can't even define it correctly, which was the disappointing thing. And certainly organizations like the AICPA and others, we had composed letters to the IRS saying, here's what an airdrop is. Here's what a hard fork is. Here's how we think it should be treated. And so that little anecdote, I suppose, is to say, it's really unclear. And to their credit, this space moves at the speed of light. DeFi summer, what? How is the IRS supposed to turn around and say, okay, this is how you should have to pay for income associated with a yield farmed asset, right? So what can we do as normal people, right? We can take the rules as we see them and try and apply them appropriately. So, there's lots of debate over how staking income should be recognized and perhaps taxed. There isn't clear guidance. I would honestly be shocked if we see clear guidance for anything, in the next 5 years, to be honest. And it's a bummer, right? Because that burden is on us, right? As people who participate in this environment. And the best thing that we can do is take a position that makes sense, and then you stick to it every time. You're very consistent. And so that way, if anybody ever comes knocking, you can say, this is what I did, this is why, and this is how I did it the same way every time. And that's a very good argument to make. But unfortunately, in the United States, right, the IRS is almost sort of like weaponized politically, and it is subject to lots of sort of like blustery political flux, right? So like the IRS in the most recent budget proposal, I think, was supposed to get, X amount of funding, which was supposed to result in Y amount of more tax collections. And then, is now taken back due to something happening in Congress. And so I'm sure as somebody who would be managing the IRS, it's like, what is going on? Like, what resources do I really have? And like, what should I be focusing my attention on? There's some data out there that says like most tax avoidance in the US is done by like the top 1%. And so it may be prudent to really like focus on people who are like very clearly not following like clearly laid out rules. And, there's, they want to track, right, perhaps transactions that occur digitally, $600 or more, right? Why, like, is that really going to make a difference? Like, as somebody who like specializes in like B2B software, like I can almost guarantee that there's no way like this government organization that is probably underfunded can do it accurately. And so, I'm pretty bearish on the IRS getting it together and like properly giving out sort of like, good guidance that we can all follow. On the corporate side of things, like I think that this is like, when we look at some of the biggest crypto companies, right, they're tax companies or accounting companies, because there is so much indexing on how to try to be compliant, and like, what can you do, right? Like TaxBit is certainly like one of the big ones out there. They just acquired a general ledger software, right? They're building out this huge enterprise stack that we've seen, in the Web2 world as well. So I think some of that trend will continue. And for us, like in our little corner of the world, we just want to make it a little bit easier, right? In facilitating payroll and getting paid. So it's tough. It's a tough world out there.
Megan, this has been such an interesting conversation. I love interviews like this because I'm just like, one, it's super interesting, but I'm just learning a lot as you're going. So I appreciate that. One of the things we like to do on every episode of Show Me the Crypto is end the interview with the same 3 questions we ask every guest in a segment we call You Had Me at Crypto. Alpha's going to ask you those questions.
All right, Megan, you ready?
I'm ready.
Okay. The first question, who's your favorite person to follow in the crypto space?
Well, I mean, I feel like everybody would have this answer, so I'm struggling because I don't think it's very authentic. But I think following Vitalik is actually like one of the things that has helped me sort of like learn the most, and it also is just like I think good to keep a pulse on the person who really had this idea and like the ethos of like why we are here. I think that a lot of times it's easy to get distracted with different kinds of like product innovation, but like, what is the, like, why are we even here? Like, why are we even doing this? And I think that a lot of the writing that Vitalik has put out there always like evokes that. He like came out with a book recently, right, which is all of his early essays and more current essays. So like, I do pick it up and read it from time to time and just to like refamiliarize myself. And it's also like encouraging to see just like how much this environment has come along. So yeah, I mean, Vitalik's great. There are lots of others, but I certainly, if I'm following anybody, it's going to be him.
That's not inauthentic. I think he's probably one of the top picks. I think for good reason. So yeah.
So favorite crypto person, Vitalik. Favorite non-crypto entity, IRS. Those are the 2 most followed.
Yeah.
All right. So second question, what will the price of Bitcoin be 10 years from now?
I'm
not
gonna
financial
do
advice. Not financial advice.
It's not financial advice. I feel like Novo, right? What did he say? It would be like 500K. I would maybe like undercut him. I think it will be in the 3-digit, like 1 comma, like in the $100,000 range in 10 years. But do I think that matters? Like, not really. I think that like Bitcoin is like an interesting system, and it was like the first system, and a lot of financial institutions are comfortable with Bitcoin because it frankly doesn't have tons of innovation, right? And it sort of has the brand name, but that can only like last for so long, I would say. Like 401k providers that want to offer crypto, like they'll offer Bitcoin, and it's like, is that the most interesting asset long term? I'm not sure. And maybe got a little Bitcoiner hate for it, but I think the price will do well in the next 10 years. Will it do well in the next 20 years? Maybe not. I don't know. We'll see.
Well, I feel like we got to throw out then the follow-up question of what will the price of Ethereum be 10 years from now?
Oh man. It's tough, right? Like Ethereum is useful, right? And you want it to be accessible to the people, So you don't want it to have this premium price point. But with staking, and certainly with, EIP 1559, right, it's a deflationary asset. So it should be appreciating value. I mean, I don't know. It hit 4K in 2021. So, man, this is a loaded question because, like, deep down,
it's 10 years out. So go crazy.
I want to say that there will be a flippening, where ETH will surpass Bitcoin. I'm gonna say it. Yeah, I think ETH will surpass Bitcoin. I don't know.
All right,
I think it will be like 10% higher than whatever Bitcoin is in 10 years.
Nice.
All right.
DeFi Dad, with one of the most aggressive predictions we've heard, said that the flippening could happen in 2023 or will happen in 2023 was his prediction. And he thought it would catch everyone off guard being in a bear market. So I was like, wow, that's bold. But
It
is bold, and I like it. DeFi Dad has always had good takes, so I feel aligned with him. But in certain aspects, right? Like Ethereum has flipped Bitcoin, right? Just not in some like price metrics, right? And so, I think that the Twitterati or whoever, right? Like price speculation is maybe like a lowest common denominator, but is it like really reflective of the environment and what people like and stuff? Like, no, do I care? No. Like, do I care if people are using Ethereum more in the future? Yes. Like, will it be reflected in price? Maybe. I don't know. But we'll see. It'll be interesting. I'll still be here in 10 years.
Yeah.
So.
love it.
All right. Third and final question. What is the most underrated project in the crypto space?
Well, let me tell you about a little company called Makara. So Makara was a project company that was spun out of a hedge fund called Strix Leviathan. And what it is, it's the first SEC registered crypto robo-advisor. So it will provide you a basket of assets and you can invest thematically in these baskets. So you want a metaverse fund or, a blue chip fund. And it will invest into those assets for you and like do auto rebalancing, kind of like, like any robo advisor out there, sort of like an index fund kind of thing. And there have been other concepts or technology out there like it before, like Set Protocol, for example, had something very similar. But the fact that they wrapped it in this, RIA license is very exciting. That makes it a lot more accessible to a lot of people. And they had a really slick like UI application for it. And they ended up just selling it a couple months ago to Betterment, which is an investing sort of like, traditional TradFi investing company. And I think that it is so cool. Like it's so, as like somebody who, used to work at a equities brokerage, like these kinds of products are like really interesting for other fintech companies. Like there was this trope, right, by Andreessen or whatever, or Horowitz, who said like every tech company will become a bank, right? Something like that. I'm definitely like misquoting him, but that concept is like every company then wants to offer other things besides payments, right, and banking. And so we certainly saw it at Drive Wealth, where it's like, okay, we can embed investing experiences. So you're on Venmo, you want to pay somebody $5. Okay, you can also take $5 and put it into, whatever, like buy Tesla, Peloton, which ended up in the worst trade of my life, worse than any crypto trade I ever made for reference. But and you can do the same thing with exposure to crypto assets in a pretty safe way, and in a sort of like diversified sort of portfolio, which any financial advisor would say diversity is key. So yeah, like this company did not get tons of hype, and I think that they were so cool, and they had a very interesting exit. And it was built by these entrepreneurs that have been in this space for a long time, and their names are Sadie Rainey and Jesse Proudman. So I'm definitely keeping an eye on them and like the next things that they build, because I'm a fan.
Cool.
Yeah, very, very interesting. Definitely have to look into that a little bit more. Megan, this has been such a great conversation. As I mentioned before, learned a ton. I think it's going to be a great episode, timely episode coming up on tax season. Thank you so much for joining Alf and I on this episode of Show Me the Crypto.
Thank you.
Thank you so much for having me. Appreciate it, guys.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.